Good morning, everyone. We'll be recording this webinar today to make it available as a resource. I just want to thank you all for joining us on our Assembly Bill 398 webinar today. My name is Nick Schneider, Manager of Political Affairs at the Vegas Chamber. And before we get started, I'd like to go over some features of this call. If you're using a desktop or mobile Zoom application, you may type a question at any time using the question pane at the bottom of the screen. We will also answer as many questions as possible at the end of this presentation. If you prefer to ask your question over voice or video, please use the raise hand button at the bottom of your screen. And when we open for questions, we will call on your name and unmute your line. Please ensure you are unmuted on your end, and please keep questions brief so we can get to as many as possible. Now, it is my pleasure to introduce Vegas Chamber President and CEO, Mary Beth Seawald.
Thank you very much, Nick. Welcome, everybody. Welcome to the Vegas Chamber's webinar today on AB 398. We're going to be talking today about the impact it will have on Nevada businesses. So I really appreciate you all joining us today, especially after this holiday. So first thing after the holiday. So thanks for being with us. It's our pleasure to host this webinar today so that we can continue sharing and discussing critical issues and solutions, hopefully, to the community. Our goal is to give the Insurance Commission the opportunity to talk about the impact of AB 398 on businesses and hopefully what the proposed emergency regulations would do to provide assistance to everybody. AB 398, as you all, I think, know, takes effect on October 1st, and it's really creating a lot of concerns for businesses and their ability to get and afford certain types of insurance coverage, like medical malpractice, cyber liability, employment practices liability, and also construction defect coverage. So the exact scope of this new law is still pretty uncertain, even to a lot of the experts. So if this law is applied as it's written, the policies that historically have had their defense within the limits would now have defense costs not count against the limit of liability. So in other words, those costs would be outside of the limits of liability. So the chamber believes that it'll take a legislative fix to address these concerns that have been caused by AB 398, and then, of course, the negative impact that it's going to have on the Nevada business climate, to say the least. So together, chambers of commerce, trade associations, the insurance industry, and businesses, together we can all be part of the solution in discussing, hopefully, a wide range of policies that could be affected. So joining us today, we are honored to have Nevada State Insurance Commissioner Scott Kipper with us today, Deputy Insurance Commissioner Nick Stosik. We also have Mark Seknin, Vice President for State Government Relations for the American Property Casualty Insurance Association, for covering Nevada, California, Hawaii, and Washington. We also have Christian Ratai. He's the Senior Vice President for the Western region at the National Association of Mutual Insurance Companies. All right, and now with that, I'd like to welcome and introduce the Chairman of the Vegas Chamber Board of Trustees. He's also the Senior Vice President of Government and Industry Affairs at Boyd Gaming, Mr. Paul Anderson. Hi, Paul.
Morning, Mary Beth, and thank you for that introduction. And thanks to the Chamber for hosting this webinar. I think having these conversations are absolutely critical to Chamber members, business owners, and certainly the effects it's going to have in the business community overall are critical to understand and then to take action, of course. Assembly 398, which we're here to talk about today, bans what is referred to as defense inside limits. And I'll have the experts go into more detail as to what that means, but essentially, it's a policy provision that limits the amount that the insurer has to pay out based on the total amount of insurance. So if you have $1 million policy, and it costs $250,000 to defend you in that, whatever that liability policy was or case was, then the remaining $750,000 is available for any sort of payment or settlement. And again, I may have got that a little bit off, but I'll let the experts go into any detail as necessary. As expected, though, members of the insurance industry are trying to digest the news, digest the bill and its impacts, and analyze how it's going to affect policyholders. There's a request by the Nevada Division of Insurance to provide clarity, including whether surplus lines policies are exempt and which businesses will be subject to the new law, and which lines of business would be subject to the new law. In response to the growing concerns by the Chamber of Commerce, trade associations, the insurance industry, businesses, and the Nevada Division of Insurance, they implemented emergency regulations and have had a couple of workshops to create permanent regulations for potential adoption here coming up soon. Through conversations and collaboration, we aim to address these concerns. To begin, I wanted to discuss just a couple of the quick highlights of the bill as it's currently in law. It applies to policy of liability insurance issued by authorized insurers, which is NRS 679A.030, and non-risk retention group captive insurance, NRS 694C.060, that provide third-party liability insurance. Any insurer with a current policy in place must provide its insured 60 days notice that the policy will be altered or non-renewed. The insurers approach the need to reform and reprice policies on such short notice. It has become clear that the admitted market may no longer have an adequate, healthy, and competitive insurance marketplace. AB 398, in conjunction with the proposed regulation, would make defense coverage separate from the liability, and an insurer must offer some availability of defense coverage, but it does not need to be unlimited. I'm now going to turn the time over to Insurance Commissioner Scott Kipper and Deputy Commissioner Nick Stosic to provide an overview, a better overview probably, of AB 398. And after that, we'll go ahead and take some questions from attendees. Commissioner?
Hey, good morning, Paul and Mary Beth and team at the Vegas Chamber. Thank you for having us this morning. It is a great pleasure to be here, and certainly it is a large part of our mission is to assist consumers and provide direction, especially in reaction to a challenging bill like this. I think you've laid the table for us pretty clearly. When AB 398 was signed by the governor, we started working and digesting exactly what was in the bill, and started hearing from a number of constituents around the state as to the challenges that were going to be present when we tried to develop the implementation. After a great deal of internal discussion with our outstanding leadership team, we felt the best proposed way forward was the creation of an emergency reg, and then the subsequent addition of a permanent reg. The permanent reg had an initial workshop a couple of weeks ago. The hearing for the permanent reg is on September 12th. We hope to have an effective date well before the October 1st deadline. The emergency reg is in place and is effective through middle of November. As Paul has said, we've got a great team working on this, headed by Nick Stosic, Deputy Commissioner here at the division. I'm going to turn it over to Nick to talk a little bit more about the detail within the emergency reg and the subsequent request for a permanent regulation. And then we'll certainly entertain questions after that. So, Nick, good morning, and the floor is yours.
Thank you, Commissioner. I appreciate it. I did prepare a PowerPoint to hopefully be able to simplify what we were doing. So I'll see if I can share this, and then I'll go from there. Okay, so can everybody see the, should be a screen showing AB 398?
Yes,
Yes.
Perfect, okay. So I wanted to spend a few minutes, and I am sorry if I repeat some of the things that have been said, but I'll just give you as much as I can, a quick overview of this bill and what we've done with the regulation and where we think right now that the impacts may lie. So and of course, I'm having trouble getting it to advance. Let's see here. Okay, so AB 398, this particular screen shows the entire bill. It's really 3 sentences, and it's really the simplicity of the bill that has created a lot of the challenges, because there really wasn't a lot of clarity to insurers on what exactly they're supposed to do to follow the bill. And again, as you've already heard, it very simply says that liability policies issued in Nevada going forward cannot have limits of liability reduced by the cost of defense, and you can't otherwise limit the availability of coverage for the cost of defense. And again, as Mary Beth indicated, this is known as defense within limits. And defense within limits just basically says that a liability policy provision states that amounts paid by the insurer to defend the insured against a claim or suit reduce the policy's applicable limits of insurance. And as Paul had indicated, in an example, if you had $1 million limits of liability and the cost of defense on a suit for a particular type of insurance was $300,000, that would leave $700,000 remaining of liability to be available to the third-party plaintiff. Under AB 398, 100% of the limits of liability written in the policy must be available for liability settlements. So if you had $1 million policy, then all $1 million would have to be available to the third party. The policies that are written with defense within limits tend to be policies that have higher exposure to litigation. And so some of the examples are medical malpractice, errors and omissions, and other professional liability policies, directors and officers, cyber liability, employment practices liability, pollution, fiduciary liability, construction defect, some products, some clinical trial liability, and some excess and umbrella policies. So there's a really big variety of policies that Nevada business owners carry that would be impacted by AB 398. And the brevity of 398 has created a significant lack of clarity within the industry. And because of the October 1st effective date, as the commissioner said, we did create an emergency regulation. It was signed by Governor Lombardo on July 20th to help clarify how the law would be interpreted and regulated. And again, since it's only effective for 120 days, we move forward with a permanent regulation as well. So the 3 things we're trying to do with our permanent regulation is clarify what is a policy of liability insurance as used in AB 398. What type of insurers does AB 398 apply to? And how defense coverage is required to be made available by insurers in these policies of liability insurance. So the regulation clarifies that AB 398 applies to all casualty policies of liability insurance issued to Nevada policyholders by a Nevada authorized insurance carrier or a licensed captive carrier that also writes third-party liability coverage. A captive carrier is an insurance company that is typically owned by a parent company, and it's designed to insure the risks of the parent. So in Nevada, we currently don't believe there are any captives that issue third-party liability coverage. And the last part is the availability of defense costs. And again, trying to interpret this bill and look at the testimony in the introduction of the bill, we tried to determine what was the legislature meaning by can't limit the availability of defense costs. So what we determined is policies of liability insurance must make defense cost coverage outside of the limits of liability available for purchase, but the limits of defense coverage to be included in the policy are intended to be flexible, including the option for the insured to select no coverage if that's what would be best suited for them. The limit selected must be included on your policy declarations page. And lastly, this section of the regulation does not apply to policies that currently don't limit defense costs. And examples of those would be automobile, homeowners, commercial general liability, which include defense coverage outside the liability limits without a specific limit of defense coverage in the policies. So the uncertainty of both the bill and the effectiveness of the regulation is really going to be what's the impact going to be on the commercial liability market in the state. And that's something we will find out more after October 1st. We do know to date, we've had 12 carriers announce that they will no longer be writing commercial liability policies in Nevada. And those carriers account for approximately 11 million of annual written premiums and approximately 1,700 policies. The Division of Insurance does not regulate the commercial market. So carriers do not file rates with us, which makes it a challenge to really know exactly what's going on in the rating for these new policies under the new bill and the new emergency reg. Since it's not effective till October 1st, we hope to shortly find out what's the impact on rates and availability. But we do know, I guess the one thing we can say is we do know since you're going to have to be purchasing defense costs as a separate coverage from liability, clearly the rates will be increasing. And we've heard that on some policies, it could be substantial. Want to let you know how to get more information on this particular bill, our regulation, and the hearing that's coming up. If you go to the DOI website, which is at doi.nv.gov, and you go to the news and notices section, which is on the opening page of our website, when you click that, at the bottom, you will see regulations. Click the regulations button, and then that will take you into our page where you can look for proposed regulation R02923. That has all the announcements, a copy of both the proposed regulation and changes that we are planning on making to the proposed regulation. And again, our hearing on that proposed regulation will be held on September 12th at 9 in the morning. And that will be my summary of this bill. I'm happy to answer any questions. And I also know we've got a couple of members of the insurance trade groups that are available to provide some impact on how they see this on the insurers in our state and what's going on.
Nick, thank you for that PowerPoint. That was very helpful in getting through that bill. And you're right, it's 3 simple paragraphs, but it's got some significant outcomes. Mark or Christian, would you like to add any comments before we jump to some questions?
This is Mark Second with the American Property Casualty Insurance Association. I think one of the challenges of this bill is that defense within limits policies tend to be written for those types of coverages, as Nick spelled out, that have 2 components. One is they tend to have a long-term litigation, and in many cases, the defendant will employ their own legal team. It will not be a legal team put on by the insurer. Hence, unlimited defense costs are impossible to price. Insurers came up with the option of a defense within limits. With the elimination of that, the industry is struggling to figure out what the bill means. They're working with the division on the regulations. They're also looking to see if and when they can change their policies to reflect the new law. Much of this business will move into the surplus lines market, which is clarified by the regulations. The challenge for that is that once business moves into the surplus lines market, the admitted market tends to disappear, so it may be a challenge for years to come. Other companies are looking to see if they can extend policies for a period of time. The legislature doesn't come back until 2025. So it would have to be a lengthy extension to see if we can bring back in 2025 if there's a cycle session after that.
You're fading out a little bit, Mark.
All right, I'll make sure I'm speaking a little more clearly. If there's a special session before that, I have to admit that the plaintiffs' attorneys did not fully understand this bill when they were asked by the legislature what lines it applied to. They mentioned auto, general liability, which are two lines which it does not apply to, as Nick pointed out. And then they kind of focus on their own legal malpractice policies, which I think is what they were really after. It will take some time for the industry to understand and react and appropriately price policies for this. I would suggest that for those who are interested and are interested in supporting the regulations being put out by the Division of Insurance, please send a letter of support. This is going to be important as we go to the legislative commission to approve the regulations. Also important as we need to build a coalition for revising this bill from 2025, or if there's a special session prior.
Thanks, Mark. And Christian, I know you're at the airport, so we'll feel free to jump in if you've got some comments, but if you can't, then no worries.
Well, thank you, Paul. Just a couple of quick points. First of all, I'd like to thank the Chamber for the invite, and also want to thank the Department of Insurance for all their extensive work. In all the years I've done this, I've never seen a regulator be more thoughtful and proactive in outreach to interested stakeholders, policyholders, and the insurance industry to really evaluate the problem. So thank you to that effort. Just a few quick add-ons to Mark's very thorough assessment. He's kind of one of our industry experts on this, so I defer to him. But one of the questions I hear a lot from people is, why is the defense cost so fundamentally different from what you see in auto and homeowners type claims? And Mark mentioned one of the key points, and that is the type of defense retained, but also just the nature of the litigation. These are not only very long, protracted lawsuits, but they're also lawsuits that involve extensive documentation, a lot of expert witnesses, which means a lot of depositions, a lot of discovery, lots of motions. So these are fundamentally high impact, high cost litigations. And that's why this is so concerning. So as Mark had mentioned, one of the goals that we have here is to make sure that our partners, which are members of the business community, understand that there's a role for them both at the regulatory level and at the legislative level. At the regulatory level, as Mark aptly stated, any letter that you could submit to the record would be very helpful, just to make it clear what the impact is on your business and what you're seeing. And then, of course, at the legislative level, no matter what happens at the regulatory level, ultimately what will happen is there'll be lawsuits. And the lawsuits are going to result from the fact that we have a very vague statute. Even though the Department of Insurance is trying to provide regulatory clarity, it's still vague from a standpoint of what it means for the contract. So breach of contract claims will flow, and there will be litigation. So a need for legislative fix is essential. So your assistance on basically encouraging legislators in your district to support either a special session and legislation on point, or legislation in the next full legislative session, which is in 2025, is invaluable. I mean, insurers only have one voice, and we're really not the voice legislators want to hear from. What they want to do is they want to hear from people who are constituents, businesses in their community who say, hey, this is how it's impacting me. This is how it's impacting my employees. Here's how it's impacting my clients. Here's how it's impacting the economy of the state. Those are the things that really motivate a legislator to get involved in this type of project. So I just wanted to thank everybody for their interest in this. If I have to bail because I'm trying to get on a flight, I'll just leave quietly. But thank you for all your time and effort on this.
Christian, Mark, thank you for those comments and some advice there as well. Appreciate that. I do think that we've got sort of some next steps to discuss before we end the call, but I wanted to, Commissioners Kipper and Stosic, you know, we had a kind of a similar, or I shouldn't say similar, but we had an insurance crisis back in early 2000s with medical malpractice, where we had doctors that could not get insured. We had insurers leaving the state. And it required, I believe, a special session of the legislature to resolve. Do you see this as critical or as disruptive, or is it too soon to tell?
Well, thanks for the question. And my response would be, I think it's too soon to tell. As Nick pointed out, we've heard from some carriers. Certainly there's a large number of policy holders and insureds that have been affected by this issuance of non-renewals. Whether that's a critical number, you know, it's argumentative, arguable, because if you look at the greater marketplace, may not be significant, but if you're one of those policyholders, it's extremely significant. So I think at this point, we're still monitoring the situation and monitoring those numbers as they come in. And I'll let Nick add a little color if he'd like, but I think we're at a point where we're still looking at those numbers as they come in, and continue to evaluate. We also are having informal discussions with those whom we regulate as to their intention or how they're working to address the concerns that obviously necessitated the move out of the marketplace by these carriers. But Nick, I don't know if you want to add a little bit more to that.
Thank you, Commissioner. Yeah, there's not really a lot to add. I do, again, we're somewhat flying blind since carriers are not required to file rates with us, and individual policies of cancellation, they're not required to notify us as well. So we are not exactly sure what the impact is going to be, but we do know, you know, necessarily there will be rate increases that'll be occurring just because of the change of having defense costs now as a separate limit, and the magnitude of those increases. We're trying to gather as much information as we can, and then once we get past October 1st, you know, we'll have the ability to reach out to carriers and get specific information on what they've done with their policies, and then at that time, Paul, I think we'll be able to determine, you know, is it anywhere near the magnitude of what occurred with medical malpractice insurance in the early 2000s. But we are certainly hopeful that our regulation is somewhat had an impact in common markets, so it won't be as large of a potential issue as it could be.
Well, we certainly appreciate your proactiveness on the issue. It's a critical piece of the puzzle when it comes to business coverage and liability coverage, and just making sure that there's some stability in the market. You know, the lists of insurance that you had in your PowerPoint, Nick, and Christian, I think appropriately explained why those are so expensive. They're just higher risk, longer litigation, which adds to the costs. So those costs would have to be covered in some other way. What are some of the options the insurers may look to resolve those costs or to balance those costs? Mark, go ahead if you.
Mark Raby's guy. I think what the insurers may do is they may create, and it seems to be allowed by the statute, a separate limit for defense costs. So that'll at least give the policyholder information and an idea of what how much defense will be covered under that particular policy. That will also allow the policyholder, if they wish to buy more coverage, to do so.
Is there also an option that they may end up reducing the coverage liability, just so people can afford the newer policies?
What companies are doing, because I'm not really aware of that, but it would make sense that if you're trying to keep the price of things, if the exposure goes up, something needs to be done to reduce the exposure, try to keep the price the same.
So Mark, what are some other ways that business owners can mitigate the costs and the impacts of this bill? And we understand that there's an implementation date of October 1. We've got some emergency regs which cover a good portion of that, but then that doesn't necessarily put this bill on hold. It's going to take effect October 1. What are some things you should be talking to your insurance broker about right now?
I think one of the things you need to talk to your broker about is that there are different types of policies that might also meet your business needs. I know for larger policy holders, there is an option to work with your carrier to extend the policy date. So you may have a policy that runs through, say, sometime in 2025 to give the legislature a chance to fix this if it takes that long. But that's not an option for most small businesses. But I think you just need to talk to your broker and find out, because usually if one company is not writing it, somebody else may, but the policies are likely to look different moving forward.
Thanks. And our understanding is that, Kristen, did you want to chime in on that as well?
Yeah, I just wanted to add a few points to Mark's good comments and observations here. One of the recommendations I would generally make is that I think that businesses need to sit down with their risk manager and their own internal lawyer to evaluate the issue. I mean, look at what the impact could be for their particular company. Because as Mark correctly pointed out, with some carriers separating this out as a result of bill, separating out indemnification coverage from the defense coverage, policyholders are going to need to have an idea of what kind of defense coverage exposure there is. I mean, how much do these type of lawsuits typically cost? And they need to sit down and talk to their lawyers about what are you seeing in litigation? What is a typical lawsuit costing when a doctor is being sued, when a small business person is being sued, when there's a professional liability claim? Those are discussions that I think companies should be having with their risk manager and also their lawyer. So when they sit down with their broker, they have an idea of what they may be wanting to ask for in coverage, because a lot of that's going to be them having a discussion with the insurance carrier about, here's what I had in indemnification in the past. What should I have for indemnification? What do you think should be the defense coverage I should have? Here's what my internal experts have told me. So I just wanted to add that kind of practitioner note as a former lawyer.
Thank you, Christian. So, and thanks again, Mark. We've been told too that this isn't going to work if you just try to renew, or a lot of insurers will not renew, that you'll have to cancel and rewrite your policy. Talk to us about that sort of technical component of it.
I think the provision in law that says that new law applies to any renewal is what's driving that particular reaction. If we do renew the policy, then it has to be different. It actually has to be a new policy.
Gotcha. So we've got to make sure that the folks that are listening now know, to Christian's point as well, to what to ask their broker, which sounds specifically like they need to make sure that they're not getting just a renewal. And those rates would probably be fairly astronomical compared to a potential rewrite that could get you to the 2025 session, giving us some time to possibly fix this legislatively then. And if there's any other questions for the attendees, please throw it in the chat or raise your hand in Zoom, or feel free to just unmute yourself and jump in if you'd like. How will this impact, this is a question from an attendee, Will this impact fiduciary liability and directors and officers insurance as well? Should employers ensure that their brokers are looking at these elements and be prepared for increases or drop coverage in all areas? Anybody like to answer that one?
I think as Dick's slides showed, these are certainly some of the lines of insurance that we covered. So, therefore, need to be made to adhere to the new bill or to approve the plan.
Mark, you're fading out again a little bit. You
That-
want to answer that again for us?
Yeah, as Nick's slide showed, these are certainly lines of insurance. You covered that. So, pricing, or make sure you talk to your broker with all the things that Chris and I have said, because we do think the bill applies to these particular lines.
Gotcha. Nick or Scott, can you just help clarify the delay on there's no delay on the implementation of 398. How does the transition on the emergency regs to the permanent regs affect what a business owner should be worried about and focused on right now?
I'll go ahead and take that. Really, the emergency reg and the permanent reg are almost identical. The only difference between the two is that a permanent reg, once it's enacted, and unless it is later repealed, would be the permanent law under the code. The only change that we are really adding in the permanent reg that's not included in the emergency reg is a clarification that this applies to policyholders of the state of Nevada, policies that are issued to Nevada policyholders. There was a question on if you had a business that had entities in other states, how would it impact it? And what we're looking at here is any carrier that's writing policies on Nevada policyholders have to submit to the Division of Insurance for review and approval the contracts. And so the contracts after October 1st are going to have to comply to the new law of the AB 398. So really the only change is we want to clarify this doesn't impact policies written in other states. It's really going to only impact policies written by Nevada authorized carriers on Nevada policyholders. And other than that, they'll be pretty much identical in the emergency and the permanent reg.
Gotcha. Thank you, Nick, for that. And I should probably clarify that the reason for the cancel and rewrite is that you're rewriting under current law and hopefully having coverage through the next couple years so that you can have the coverage within limits versus the October 1 date. If you were to renew or get a new policy after the October 1 date, you'd be under these new laws and regulations. Is that accurate to say?
Yeah, that is accurate.
Right.
Absolutely. I do see there was a question by Misty as well that said, if the renewal happened in May, for example, before the bill is passed, is that okay? And the answer is any policy that renewed prior to October 1st or was purchased prior to October 1st does not have to comply with this law. But the bill does say any renewals or new business after October 1st of 2023 would have to meet the requirements of AB 398.
And then the catcher, I guess, would be that if you just did an annual renewal back in May, you're going to fall into this new law once you come up with another annual renewal. So the goal would be, if you can work it out with your insurer and your brokers to get through, so we have an opportunity to potentially change the law in 2025 to get a 2-year policy or something that would extend into that time frame. Is that accurate as well, Nick?
It is, but again, you'd have to have that done prior to October 1st. So if you change the effective dates, let's say on your May renewal to a 2-year period at that point, based on the language of the statute, at that point in time, the renewal would have to be on the new AB 398 language.
Gotcha. So still critical to renew the current policies you have, even if they've renewed under the old law, make sure that you've got some coverage, hopefully through at least the 2025 legislative session. Anything else that we should cover here before we kind of wrap it up? Scott, Nick, how can we be of further help? Maybe the last question, and we'd heard that maybe sending some letters of support in for the regulations. Is that something that is helpful, and from our end, trying to be more proactive, just like you guys have been?
Well, Paul, I certainly think that those two things would be very welcome, and certainly provide those policymakers with some sense as to the importance that the business community places on this emergency regulation and or the challenges presented by the bill. So I would certainly encourage you, if you are inclined, to submit a comment on the permanent regulation, but also if there are questions you might have for the policymakers to address to them.
Great, thank you. And we do have just a couple more questions I guess we'll throw in before we wrap. If a company does business in Nevada, but is a multi-state business and their policy is housed in a different state, are they okay?
And again, that's what we're trying to provide is clarification in our permanent reg, that if it's a policy that's issued in another state, the policy would not be required to include the 398 language. In Nevada, or not Nevada, excuse me, but with the 50 state insurance departments regulating insurance, historically, the law that is being followed is based on where the policy is issued. And so we have that occur all the time, where you've got pretty much 50 different states within different insurance laws. So we've tried to clarify that it would be applicable to policies that are issued to Nevada policyholders. And if it was issued in another state, then it should not apply.
Gotcha. Well, thank you very much for your time today. Appreciate all of the input and the insight. Mary Beth, I'll kick it back to you.
All right, thank you, Paul. Great job moderating today, and really want to thank our guests again, and would ask Commissioner Kipper to keep us informed, and Nick too, as we get more information. We'll definitely be sure to have more of these webinars, maybe even more chamber events in person and what have you. So really want to thank you guys for all your work and helping us protect the business community. So appreciate you a lot. Once again, just everybody, thank you. Want to thank Nevada State Commissioner Scott Kipper, Deputy Insurance Commissioner Nick Stosic. We also had with us today Mark Seknin, Vice President for State Government Relations for the American Property Casualty Insurance Association. Also, big thanks to Christian Ratai at the National Association of Mutual Insurance Companies. Thank you guys all so much for your expertise today and for joining us on the call. We look forward to more discussion soon, and thank you again for your service and your help with this. Thank you very much.
Thank you.
Thanks, everybody. Have a great day.